Talk to us about how the international picture affects the mix, because if you look at a lot of the data right now, this is just one example, things are looking fairly good all around the world, at least relative to where they've been.
I think that's right. If you look at some of the economic surprise indices, which track how economic data is coming in relative to expectations, you've seen a marked improvement. And this started before the election. So, the prospect of getting more fiscal stimulus, any fiscal stimulus, at a time when the global economy is at least stabilizing and maybe sort of modestly accelerating, this is a lot what has been reflected not only in the stock market and the bond market, also commodity markets. Look at iron ore, look at copper. All these economically sensitive materials have been rallying hard the last few months.
Do you think people, because they're so focused on Trump and they're so focused on the election, have missed this eco data story, which, as you said, has started before the election?
Well, I think it's been lingering in the back of this move because I don't think the move would have been as dramatic, except for the fact that it came at a time when there already was an inflection point in, as you point out, the global economic data. So now if you get stimulus on top of that, well, again, maybe you get a bit of inflation. Maybe we start to move to the upper end of this range, which has defined the global economy over the past 5 or 6 years. All of which, again, plays to this reflationary theme we've seen every asset market over the past few months.
I wonder to what extent all the capital controls in China and the capital flight out of China is coming into U.S. financial assets. Do we see money from China helping prop up asset prices in the U.S.?
Well, I'll tell you where I think it is propping them up a bit is in some of these commodities. So, yes, things are improving, but these almost vertical charts you see for many of these commodities partly reflect wanting to own dollar-denominated assets. And that's part of what's going on that's been supporting some of these commodities, particularly the more industrial ones.
Real quickly, last question. These big markets, U.S. equities, 10-year rates, where could they go in the medium term before they turn around?
I think we could still see them back up, maybe 260, 270. My guess is you probably won't see rates start to pull back a bit until the equity market stumbles. And we're now in a seasonally strong part of the year, so it may run for a bit.